Good morning, everyone, and welcome to the European crossover webinar and happy NFP day. We did see the euro slip quite a bit, and obviously the dollar going to move, and also a big mover overnight is also going to be the dollar yen. See how quickly this fell back. We do have the analysis in place here. A moment. But the dollar yen has gone and dropped off quite a bit. Let's go and we'll move into the news. Correspondingly, also, we've gone and seen the Aussie yen coming to some key support. We had that in the Asian analysis. We're actually looking for this move right here to 77.75. Looks like we just tagged that and actually popped off of that 77.75 if you saw the Asian analysis. And also with the dollar yen, looking for major support there on the Asian analysis. We broke, which was down to 10.95, and we've just about got there to 10.95. Yeah, actually we got there right to the pip, 10.95. Basically the same thing to the pip on the Aussie yen. Looking at the cable, cable's still relatively weak right here. So we'll go on and move into the news, get ready ahead for NFP. On the morning bid, British Prime Minister Theresa May will travel to northern town of Grimsby, a leave area where once thriving fishing fleets suffered under the European Union quotas, for a speech in which she will once again put the onus on the EU to make concessions to avert a no-deal Brexit. Given that the EU capitals have made it patently clear that they cannot compromise the core rules on which the EU is based, you have to wonder whether the speech is largely for domestic consumption, essentially an attempt to shift blame in the event her deal is defeated in Parliament again next week. Her Foreign Secretary, Jeremy Hunt, is meanwhile citing unspecified signs of progress in talks with Brussels and warns both the UK and EU will be judged badly by history if the outcome is a no deal. Today's Women's Day event have an overtly party political edge in Spain, where the gender equality and women's rights have become a pivotal topic in campaigning for national elections due on April 28th, whereas Minister Pedro Sanchez, outgoing socialist government, has long sought to portray itself as a promoter of gender equality politics. German industrial orders posted their biggest drop in 7 months in January. Data showed earlier in the latest signs that Europe's largest economy had subdued start to 2019. Orders were down a steep 2.6%, confounding forecasts at a 0.5% increase. The government said the decline was related to strong upward revision of the December figure that alone is unlikely to reassure analysts. Bookings for a wide range of goods fell in January, with both foreign and domestic orders declining. And into the markets, shockingly weak export and import readings from China, the world's largest trading nation, have whacked Chinese shares 4.5% lower today, stalling a rally that took the market to a 20-month highs earlier in the week. The selling spread across Asia, taking Japanese equities down 2% and Pan-Asian index down 1.5%. Europe is opening around 0.5% weaker, and Wall Street futures are down 0.5%. Come a day after the European Central Bank cut growth forecasts and announced more stimulus, it just confirms the world economy is in trouble. China's February exports fell 20.7% from a year earlier, the largest decline since February of 2016, and imports fell 5.2%. The day ahead will bring more signals on the state of the world growth. U.S. labor market reports at 13:30 GMT. These may show whether the employment and hourly wages are plateauing. German factory orders have already shown an unexpected drop, in Norwegian gross domestic product slowed in February from January. The euro fell to 21-month lows, has strengthened only marginally this morning until Eurozone government bond yields are down again after dropping to multi-year lows following the ECB announcement. The German 10-year yield was at the lowest since October 2016, receiving downward impetus from the industrial order numbers. This week has confirmed a shift back towards the dollar. Federal Reserve may have paused in its rate increases and growth may be plateauing, but elsewhere looks worse. Central banks from Australia to Canada to Sweden have turned their tail on policy tightening, and emerging markets are in rate cutting mode. The Swedish crown has also made some uplifts against the euro. The dollar's inched down toward 0.2% this morning after rising overnight to the highest since December. European stocks were expected to fall 0.4 to 7%, heading for the first weekly drop of the month. Bank shares fell 3.3% yesterday, with Europe largely on the other side of an underwhelming earnings season. And let's go on and move on to the Australian dollar, which clings to support at 70 cents. The Australian dollar held near crucial support of 70 cents on Friday, on track to fall for a third straight week. On the outlook for both global and domestic growth, the New Zealand dollar paused after 3 days of declines. The fall below 70 cents could take it to levels last seen in early 2016, barring a flash crash event in January when the Aussie briefly saw 67.15. So far this week, the Aussies lost about 0.9% after having fallen 0.7. The currency took a small hit earlier in the day from a disappointing import data from China, Australia's top trading partner. The slowdown in Chinese imports has coincided with Australia's domestic economy cooling, largely as a result of a downward turn in the housing market. Growth appears to have been the most significant momentum, placing at risk improvement in the labor market. NEB economist Alan Oster said in a note revising the bank's policy rate outlook from no change to 2 cuts this year. Across the Tasman Sea, the New Zealand dollar hovered around 67.54, pausing after 3 straight days of falls. And you're looking at the euro, stuck at a 21-month low after dovish ECB talk. The euro wallowed near close to a 21-month low against the dollar on Friday, hurt by a series of dovish signals from the ECB, and the currency market braced for future volatility. The euro slid along Eurozone yields, with 10-year bonds declining to the lowest since October of 2016. The February U.S. jobs report to be released could stack more pressure on the foundering euro. Economists polled by Reuters expect 180,000 jobs out of the United States after 2 months of staggering growth. The U.S. economy added 304 jobs in January and 220 in December. Whether the dollar can remain on an uptrend long-term is debatable, but for now, a strong U.S. jobs report could provide a further boost for the currency, said Junichi Ishikawa. The dollar index against a basket of 6 currencies was a shade lower at 97.54. The dollar is head and shoulders above the peers, and this also means that the currency most susceptible to potential adjustments. The greenback was down 15 tenths at 11.44 dollar yen, stretching overnight losses amid risk aversion in broader markets. But of course, this has moved lower after that China news. And lastly, in regards to German yields, the German bond yields took a step closer to 0% on Friday as weak economic data from Europe's biggest economy, as well as China, reinforced the dovish stance from the ECB. The data on Friday concerned about the global outlook. Chinese exports tumbled to the most in 3 years. So let's go on and move on here. The ECB had a bullish impact on bond markets, and that's set to continue, said Claren O'Hagan, Strait Strategist Societe Generale. We're not expecting something so clear so soon, and the markets were not either. So bond yields are likely to stay lower for longer. Okay, and we'll go on and move into the analysis here. So as we get a straightforward ahead into the ECB, but the NFP. We're looking over here on a weekly chart, and really we're looking for a move potentially could come down here to 11.49, but that's a key weekly support here for the euro. So as the euro broke key daily support at 12.19, a challenge of weekly support level is going to be 11.49 with resistance at 12.19. So this is pretty cut and dry right here. Here's the support down here at 11.49, and that's key weekly support here. If they want to make a move now, you could probably bounce around in this whole little area here, but we're looking at 11.49, and then when you go into a daily chart or move this to the daily, well, this is a key area that they broke here, which was this 12.49. and they lost that, and that's going to be resistance. It's basically cut and dry. Could you move higher? We can look at a 2 hour if they get a little bit further bounce. And that'd be up here on extreme move here, 1235. But 1219 is very, very key. So on a little bit of a stretch move, the dollar pulls back. We're looking at 1235. And 1149. Okay, and moving on to the cable, it says cable continues to pare back. So the support zone is 30.33 to 30.62. Resistance comes in at 31.80. So as we look here into the cable, here's that zone that we're talking about. If they go on and pare back, cable's still in a buy mode. I mean, obviously, we made this pretty big run up in here. All we're doing right now is coming right back here to the slower exponential moving average, but we've got this little buy zone right in here between 30.33 to 30.62 here. Right here, you see that clearly. So once again, if we get a strong NFP jobs, if it were surprises to the upside, this is that area that we'll be looking at potentially. And once again, maybe we hit a few more stops going into the weekend. So let's play it on the safe side. It's going to be, we'll call it right here, right there, 30.33. That's what we're going to go and put, because on NFP day, we're obviously allowing for greater volatility. So, or which generally means more further extreme moves. So 30.33. And let's take a look on the upside. Well, 31.28 is fairly key area here. I mean, you can see that. But once again, the same thing with the extreme moves here. That'd be right up here at 31.58. Just keeping it simple, just going with the technicals. Obviously, if you look on here on the 2 hour, the momentum has shifted and shifted lower, but this market's still in a buy mode. So you would look for support coming in, as I mentioned, that 30.33. You can see here, right, splitting the difference a little bit lower, just really right there is at 30.43-ish area. But look on the daily, it's 30.33. If for some reason the cable were to pop back up, not expected, we can split the difference right there at 31.42. 31.42. I'm gonna pop back up here. Still remains bullish overall. Well, we're just below that 70.27, and here's that area right there at 69.86. If we do break lower, and certainly looks like that's going to work as almost as a magnet right now. I'm surprised that we're even holding just above the 70 cents. When we look at it on the 2 hour chart, We got just below that 70.18 cents. There's a little bit right there. Well, the 69.86 area here. There we go. You know, I'm surprised it's still holding. I'm surprised we didn't trigger stops below 70 cents. But if they do want to make that move a little bit lower, and they're holding just above that area here. But this 70.18 is a good area. But I thought they would have pushed lower, especially with the Chinese news. But you have to go and figure out how much further can they go on and push a little bit lower here. And that's not a whole lot lower. Let's see, there's a 69.16, but just below here. It's not that far here. 69.84. And I think you have to take that into consideration. Yeah, and look at as far as resistance. Well, that's certainly going to continue to work lower here. Generally don't go across. I always like to go across the bodies, but you can see right here, the stab down here right to 70.51, actually 70.52, and then right here. So we're going to go with that. If they were to trigger a little bit higher, I don't see that happening. But looking here for that, right there would be resistance. And not there. Hang on a moment. There we go. Right there, 70.52. And let's take a look at the dollar Swiss. This is a market that many expected to move higher about 3 weeks ago, and nothing happened. And here we are pushing again here. And that's weekly resistance coming across here. One moment. It's just a bit higher here. right there. We got above it and we're just pairing back, which is just 101.12. Big weekly resistance right there. We'll see what we can do if we get above that. Hang on. And this thing has motored along. Support right now is going to come in right here, par 69. Par 69 for support, very short-term support. And look at this dollar cat. It continues to remain so strong here. Very well bid. And I don't see any changes here as far as what we had yesterday, which we were looking for as high as 34.98. And we're going to stick with this 34.98 for the resistance. But it's remaining well bid here. And support's going to come in right there at 34.14 for right now, short-term basis. Make the case a little bit lower. I think they would grab at that for that 34.14, but there's a little bit, just a little bit low, which is 34.02. We'll call that right there, 34.02, just so you can press just a touch bit lower below that key. And that 34.14 is a key level. And next, let's go and take a look at the dollar peso. Says the dollar mex has taken off after buffeting the resistance levels on Wednesday. Remember, they had 3 opportunities to fail on Wednesday, and it kept pushing higher. And boy, we said, watch out, don't get short on this market. And we certainly did pop up. Initial resistance on the upside is going to be 1964 through 1968, where longs will shave a portion off. Initial support will come in at 1951.8. So let's go in and take a look here with the dollar peso. And here's what we're looking, and remember, we had multiple times to go in and fail on Wednesday. And we talked about this yesterday, indicating like, boy, this thing had opportunities to fail and, be careful. We were saying that, but leading up into that, be careful with this being short. I mentioned to Blake, I go, does it look like an inverted head and shoulders? And so we've actually made a pretty good run up in here in the dollar peso. And this is what I think potentially can go and run up to. I don't know if we'll make it. We will eventually make it here to the 1971 and push a little bit higher. And certainly has so far has had a pretty good little head of steam here. But any push back up in here, I think we'll start to. You'll see people starting to shave it off. Okay, but we've had a pretty good solid run. You can see here we've really triggered a bevy of stops. Here. And so any move up in here towards this, you can see right up here. And generally, I don't even go, as I said before, I always like to go through the bodies. But when you're looking for an extreme moves up in here, then you want to go with the actual wicks itself. And that would take us right around 1968. That's something, if we get an extra push, I think that you would start to see, see longs really pair off a decent portion. It doesn't mean we won't, but eventually move higher. But that's what I'm talking between 64. You can see the 64 area right here to 68. Seems like a wide area, but when you consider the extent of this move, it isn't. Now support is going to come in right here. We've got that marked off. Look on our Asian analysis that we put in here. 1951.8. Right in there. Just a little bit lower here. Dip them back. Right there's going to be initial pullback. So let's and certainly bullish. We've had some pretty good strong moves, whether it's to the moving on originally. Remember this move up here, which was 161% up here, all the way down here, and then a rally back up to a 61%, and then a 61% pullback, and then this market just really wanted to push much higher. So it trades rather technically. It can be volatile. There's no doubt about that, but it has a good technical feel to this market. And we'll move in now to crude oil. Starting to see the crude oil just pair back a bit. I'm still even surprised how crude's even been able to hang on here. I mean, we got that poor China data, ECB, and then the body writing down the global forecast also. It's just been one thing after another. And I'm just amazed how it's been able to hold up here at these levels, and we haven't seen a bigger pullback. You can see right here on the daily, though, look, we might be starting to rotate a little bit lower here when you look here. Really opening the door for a potential move lower. Let's go and take a look at here on the 2-hour. We had a resistance here at 56.48, and that has held the market in check fairly well. Looking for a little bit lower move? Yeah, I would think so. As equities continue to roll lower, we generally look at the very short-term basis, but be a little bit careful with this one. I've got 55.15. I'd actually be looking for a move down here to 54.98. Trigger some stops here. There. It's actually 50. Call it 54.98. And we could even see much slower here. I don't even see how we've been able to hold these area levels here. We're going to go and keep this same resistance here, 56.48. No change there. $56.48. And let's go move into dollar yen. A big mover overnight. Dollar yen is losing momentum as equity sell off and U.S. yields slide back. The 1128 is the 23% with daily support level 1136. Major support comes in at 1095 with resistance at 1196. Well, 1095 appears to be exactly where they ran to. Here, when we look at the 2-hour, here's that major support. Obviously, that China news had its own. Let's pull this back. And that's where we ran to this 1095, which is that major support here. And we look on here, that's where it went to the pip. And that is major support. And we can even move lower, but we had 1095. We're going to move just a hair bit lower for 1087. If we get, we try and push the stops a little bit, but there's some good support. That's our major support we're looking for on the Asia analysis. I certainly didn't expect that to be hit anytime soon, but certainly we've arrived in 1136. Remember that key daily? That's actually going to be our resistance we'll use as resistance of 1136. 1144 has been key also, but we'll go with 1087 on the downside support. And boy, did we lose some momentum. But the reason we lost some momentum is look at U.S. yields. Remember, we were way up there in the stratosphere almost, and we've obviously now rotated even lower. But that's what we're talking about, losing that momentum. It was losing its upside oomph. Here's that key daily level here, 1136. And we're going to use this for resistance, 1136. That'll be our resistance. It's a key daily area. We know that. So 1136 will be our resistance. But I like that 1136. Here's the 1144 on the 2R. I think I'll have a tough time even trying to get back there. So that's why I want to go with that 1136. That being a key daily level here, 1136. Moving on, let's move into the ASEAN. Obviously a huge mover overnight. Generally, I don't look at this on the daily, but actually I did the Asian analysis. Kid says the Aussie yen is heading for daily support at 77.75 with initial level of 78.01 via the 2-hour, resistance is 78.58. So I said the Aussie yen, I did this last night early in the session, but I said Aussie yen is heading for daily support 77.75. Well, lo and behold, that's exactly what we went to, 77.75 right there. We took it out by what, a little over two pips or 2.5 pips. But we went right down here to the 775, really just about the levels, and you can see the touches, and that's why I was coming up with this 77.75. Just the touches coming across here. You see that? So there's our support there, and we came right there and took it out by a little about 2.5 pips maybe, or just over 2 pips. At this point, you're probably looking right here at 78.36 on the resistance. It really even pushes it up just a little bit higher. I don't know that we'd make it up here. It'd have to be a heck of a move higher, but we'll give it that and we'll say it'd be 78.44. But that'd be a heck of a move back, but be 78.44. Initially, if you're scalping it, you'd be looking at 78.18. I got short yesterday and I covered, I think it was like at 78.17 or something. It was like later in the day. But because that's what it reminds me right in here, this area right in here, 78.19. But we made this move up in here. The real resistance would come in 78.44. That would give you a good idea. You can see this coming across here. Let's notate that. Think of it as your line in the sand. right there. And let's go on and move in now into the cash dollar index. This market has continued to be, boy, it's just been up and up and away, and boy, and Amanda has just been the dollar bull for a long time. And it's been proven correct. Since we've come up here to challenge, and I think, as we said, I think it's like over a week ago. I'm not saying the dollar doesn't have strength; it has a good reason. The economy still remains strong. They're looking for recession now. They're like, oh, I guess no recession, but at the very least, it's been the least dirty shirt in the hamper, which is actually more than that now. But it's been, think of it as a preferred one of everything else, because nothing else is, when you look at all the different central banks. I mean, obviously now things even change even further, considering how the ECB has moved their stance. But that being said, it just kept maintaining its strength. I just don't know how much further this thing can go on and push. Other analysis of, I've seen some analysis that we covered here. I'm talking analysts like Esther Reichhold, who had said, well, you know what? We don't expect it to appreciate a whole lot more, but it's still better than the rest, so it can appreciate a little bit more, moderately. And certainly we're making this move here. And then when you look at this, and I was actually looking at a weekly chart last night. I think it's actually the weekly chart we did, and we'll get to that now on the Asian analysis. Dollar finished very strong. The upside resistance is going to be 97.88 level, confluence with 97.89, the 61% of 88.29 to 103.83. So let's go and take a look at this, as I said, on the right in here. You see this move? Right there's the 61%. And that's confluence with this level here at 97.88. So that's going to be our resistance here. Now let's go move into our customary 2-hour chart. If we were to see a pair back, it's going to be right here at 97.24. And that's going to be our resistance. I mean, support. I think we also even had that listed on an Asian analysis. I put it here actually for 97.34. But we'll go 24. Let's go with gold. Well, we are seeing a nice little rebound with gold now. Give it a moment. So we just come into this resistance here, this 1293. Let's take a look at here on the 2-hour chart. We had that as our resistance. There's a little bit of a level, just a nudge above here. Obviously, with yields moving a little bit lower, which is going to be supportive. See, once again, we're a little bit over. So we're looking for potentially a move down to 1275. So we triggered just below here, but we couldn't make that move here with yields coming off. That certainly, and maybe equities turning over has allowed this to move a bit. We'll go right there here. A little bit of a, I wouldn't call it a stretch, but some extra little short covering. Right there at 1297. Look at that little extra move for today. Maybe even push a little bit higher if we'll get a little bit weaker jobs report. Support on the downside, well, it's going to come in right there, and that might be asking for a little bit too much. Let's go right here. It's going to be 12. Let's call it 1287. 1287 right there. Whoa. We'll call it 1288. 1288. The ease back in yields, that's supportive right here. And the market, we could make that stab below 1280. So starting a little bit of short cover. Anyone that was short here might say, well, wait a minute, maybe I waited for too long. Maybe I came in too late. So maybe try and push it up a little bit here towards that 1298. I mean, 1297, I apologize. Let's go and move into the bunds. Well, it's been up and away here with the ECB. And remember, those German numbers came in rather abysmal. So now here we are looking at it on a weekly chart. Key resistance comes in at 67.21. Let's pull this back. We'll call right there, 67.24. Well, we just about made it there. And that's, you can see that that's key weekly resistance here, 67.24. And support will be right there, 66.78. We were looking for a move lower here in the DAX. We had 11,506, and they even breached that area here. So coming into today, we're looking for 11,398, potential 11,398 here on the DAX. All this area is held this. We've had pretty good resistance and support here on this market over the course of the week. Resistance is going to come in right there at 11,540. I don't see that coming back up here, but at least you know that's your line in the sand, 11,540 here on the DAX. You're trying to move up a little bit higher here. You can see it at 1213. As we mentioned about that is we'd be looking here at 1235. Right there. A little bit of an extreme move would be 1253. Obviously, the dollar yen came into that key area here that we had for 10.95, actually to the pip. So these are the big movers right now. And we'll get this posted and ahead of NFP. And thanks for joining us here on the European Crossover webinar.